Hello, welcome to Banking and More. If you are a customer of one of the 50 defined fund management companies, chances are that you've been keenly following what is happening in the industry. Since the revocation of the licenses and the arbitration process, a lot has happened. The current one is that payment has started at least for 20 of the fund management companies that the Registrar General, which doubles as the official liquidator, has secured court orders and gazettes to be able to liquidate them and pay off the customers. Payment, like I said, has started and is done by GCB Capital, one of the new entrants in the investment management space. We are here to understand the process, to know exactly what is happening, what it means for you out there, and what you need to do to be able to access your funds, and if you can take all or you should take part. My guest on Banking and More is Mr. Kofi El-Awuku, Managing Director of GCB Capital. Kofi, welcome to Banking and More.
Thank you very much, Maxwell.
So, GCB Capital is fairly new, less than 2 years, and you have a big task like this to quote and unquote satisfy customers, people who have had their funds locked up for over a year and counting. How is the experience like?
Thank you, Max. It's been an interesting experience in the sense that, as you indicated, it's a fairly new entity. But then it comes with a team that has quite appreciable experience. And whilst we may have our strengths in having done several things, managing a bailout program wasn't one that we had been prepared for from previous experiences. But the ability to harness your strengths and your skill set to take on new challenges is one of the things that we pride ourselves on. So it's been interesting so far, and we have it under control.
Great. It's good you said you have it under control. So payment has started, customers have started coming in, and you are giving them their funds. What is the status now?
The status is that as at close of business on Monday, we had made payments to about 612 clients, both individual and corporate entities, who had submitted redemption requests for payments out of the fund. And the total amount for that is a little over 20 million CDs. So that is where we are now.
So these are customers who lost funds. Their claims have been validated, and then the appropriate amounts have been agreed by you, and then of course the second official liquidator to pay. So when a customer walks in, what shows that this is the customer who has funds with you or is supposed to be paid by you?
Great, thank you. So quite a lot of work has been done by the liquidator, by the regulator, and the agent they appointed, PwC, to receive, assess, and validate all the claims of these claimants. Now, the claimants were allocated unique numbers called claim IDs by PwC. That sort of authenticated the identities for the validation process. Subsequent to that, as you may be aware, the clients were invited to do creditor meetings with the official liquidator, following which there were investor class meetings as well, at which the entire bailout program was explained to them. So the clients were then invited to go onto an online portal and sign up for the bailout program, because Maxwell, the program is optional. Clients either can choose to sign up for this or stick to the traditional model where the official liquidator needs to go through the whole process of finding assets, liquidating, and making payments, which could possibly take several years. Now, clients who have done all of that are then transferred to us at GCB Capital with the claim IDs. So the identification process is very clear, and there are no issues around that. What we do is to accept these clients, a database that is presented to us, which we then also onboard into our system and generate matching ID numbers, because in our system, they get account numbers also generated for them. These are numbers representing their membership in the mutual fund to which they have been onboarded. So that is another layer of security we do as far as client identification is concerned, because at that onboarding stage, they are required to present ID documentation, passport size photographs, etc., which we vet and match with the information from PwC to ensure that indeed we are talking to and dealing with the particular client in question.
You mentioned that it's optional. Why would it be optional, especially when the government is the one funding the bailout and it is to people who have lost money? Why didn't the government just make a such that the funds are there, people should come for their money? Why must I have to come and express interest?
Yeah. Very, very important question. You see, there is a standard approach to going through liquidations. That approach exists. As I indicated earlier, the official liquidator would look to identify assets and liquidate and then pay the creditors, including the investors. What government is doing now is sort of intervening. You can look at this as a social intervention by the Republic. That says that, see, we are aware of the challenges you've had over this period as you've waited for your money. And we are also conscious of the fact that the liquidation process could take several years. And so we want to intervene now by providing this special purpose vehicle that will pay to you your validated claims. However, the traditional or the standard approach to liquidation remains. So if a client chooses to stick with that standard model, they cannot be forced, so to speak. But Maxwell, between you and I should think that if somebody offers to help you out of your situation now and make you whole now, it is a more attractive offer than waiting for a longer period and a longer process to sort of attain the same thing. And so much as it is structured as an optional program, it is indeed one that is too attractive to ignore.
This is still Banking and More, and we are having a discussion with Kofi El-Awuku. Kofi is the managing director of GCB Capital, the company that is doing the payment for investors who lost their funds during the collapse of the 50 fund management companies. We are trying to understand the status of the process and what it means to you and how you can access your funds in case you are one of the affected customers. Kofi, we know that there are about 5,000, in excess of 5,000 claims that have been validated. But based on what you said, that 5,000 will only be paid if all of them come. But what are we looking at in terms of value? What's the value of the funds that this 5,000 claims that have been submitted lost, so to say, that the government is looking at refunding, should all of them request the bailout?
Thank you. So per the data that we have received from the agents of the official liquidator, the about 5,300 or so clients of the 20 FMCs that we're dealing with presently have validated claims in the order of about $1 billion, thereabouts. Okay. And as far as funding is concerned, to address your question, the government of Ghana has committed to cover these claims, of course, augmented with possible recoveries that the liquidator can immediately make.
Yeah. Okay, so the value of the claims is about $1 billion,
thereabouts, and
government is willing to make up, together with funds that will come from recoveries that will be made out of the liquidation process.
That is correct.
Okay, so if a customer doesn't make a request, what happens to the funds that the government would have set aside to bail out that customer?
Good question. So what government has provided is a commitment facility. Okay. They have provided funding in the form of a debt instrument, which would be drawn upon into cash to satisfy the needs of the customers as and when they make the requests.
Okay, we understand that people who are pensioners 60 and above, investors who are institutional investors who are schools, hospitals, and then faith-based organizations, either churches or mosques, they can get 100% of their amount in cash, irrespective of the value. what is the structure for those that do not fall within this category?
Great. The structure, indeed, quite a lot of work has gone into creating categories of investors such that we could meet the needs of different categories as much as possible and in the most convenient way. So as you rightly indicated, one primary category of investors that are being addressed right now are persons 60 years old and above, right? Those individuals are getting the full amount of their validated claims in tier 1 of the fund. And I mentioned tier 1, I will speak presently about the structure of the fund. It's structured into tiers 1 and tier 2. So persons, as I indicated, 60 and older get the full amount of their validated claim in tier 1. Institutions such as schools, hospitals, churches, mosques, etc. are also going to get the full amount allocated to them within tier 1. For financial institutions, and there's quite a number of them in the client base that are exposed to these collapsed funds, they will get 50% of their funding in tier 1 and the balance in tier 2. Another critical category, which is quite a large component, are individuals below 60 years. For them, it's not a percentage arrangement, it's a capped CD figure. And that CD figure is 70,000 Ghana cedis. So what that means is that if you are an individual below 60 years old and you had a validated claim with a defunct fund management company to the tune of 50, 60,000 Ghana cedis, you are getting the full amount provided to you in tier 1 of the fund. And if you happen to have more than 70,000 Ghana cedis, then that balance goes into tier 2 of the fund. So if I may proceed to talk about tier 1 and tier 2. The fund is a special purpose vehicle designed to manage the payments of the bailout funds to the investors who have waited so long for their money. Now, it is structured into 2 components, 2 tiers. Tier 1 operates a bit like a money market fund in the sense that your allocation in there can be redeemed, or to put it simpler, sort of withdrawn into cash within a maximum of 48 hours. And then tier 2 is more of a long-term component of the same fund. And that means that your ability to withdraw or redeem your shares in there has some restrictions to it. You can do that, but over a period. Yep.
Okay, so assuming my funds are paid into the fund, and then I do not want to access all, even though I wanted my funds at the time they weren't in, but now that they are in and I can see and I can feel them, I do not want to take out all. What is the process for me?
Very important question. So indeed, you've been given allocations in the fund, which is being professionally managed for you. So unless you actually need to withdraw cash, you don't even need to do a redemption at all. Your fund stays in the mutual fund. You get the periodic reports. You get invited to meetings. You get all the updates that are due you as an investor in the fund. When you do need cash, you will submit a redemption request, which is available at our website. You submit it to an email address that is provided at the website. And then that is received by GCB Capital, processed, and then the cash now paid into a GCB bank account that has been opened for all the clients in scope. So every one of these clients that has been transferred to the AM fund has a GCB bank account opened for them. So you get cash only when you've actually done a redemption request, and it's processed within maximum of 48 hours and paid into your bank account. And it's at that point that you can now walk into the GCB bank branch, present your KYC documents, and by that I mean a passport size photograph, some ID, a valid ID documentation, and a utility bill that would confirm your address. And let me add quickly that the utility bill should not be more than 3 months old. So you present these to the bank will now use that to validate the account that we've gone ahead to create for you. And we're doing all this also because it's important to establish your own identity. So for you as a client, if you are Kojo Mensah, we want to be sure that the money that is being paid to Kojo Mensah goes to him after waiting so long, and not to somebody else that attempts to impersonate and all that. That is how come we have that level of KYC requirement.
But what it means is if I don't walk in, if I got the confirmation that my money is available, I didn't go in through any of the process, the funds will be managed and returns will be paid on them later in the year or later next year or next 2 years. When I walk in, I'll get those funds.
Absolutely correct. Your money stays in the fund and it is managed for you, and it is managed by no less a firm than the subsidiary of the bank that has been voted the safest bank.
This is still Banking and More, and we are trying to understand the status of the bailout package put together by the government and administered by GCB Capital to customers, investors of the 20 fund management companies that the Registrar General, which is the official liquidator, secured court orders and then gazetted them to be able to liquidate them and pay the customers. El-Awuku, what went into deciding who to pay 100% and who not to? The pensioners you can understand because of vulnerability, but adding the other institutional investors like faith-based schools and then hospitals, together, was it a factor of value, as in the amount that those now classified as critical investors hold in their claims, or is as a result of a factor beyond that?
Thank you, Maxwell. The consideration was not a factor of value. It was more an assessment of how pressing the need is. And so, yes, pensioners, as you indicated, is very much understandable. For the other organizations, the faith-based organizations, the hospitals, the schools, these are largely non-profit organizations. And so to have their funds logged in and considering the kind of services they render, in deciding what the categories would be, it was decided that as much as possible, government should seek to cover 100% of their claim as well in Tier 1. Now, the two other categories, individuals below the age of 60, yes, absolutely. I'll be the first to admit that there would be some persons who are below 60 and could also do with 100% of their money. However, there is only so much in terms of immediate cash that government could avail. And that is how come there's a Tier 2. And the idea is that at least within Tier 1, government is able to help you up to this amount, the capped CD amount I indicated earlier. And then beyond that, the rest is available in Tier 2. Yes, the pensioner gets 100%. You below 60 gets below that. You might still need 100%, but at least you are in a slightly better position to survive with a bit of your investment for now than our grandma or grandpa who is like 97 years old.
Tell me, what are the details or the terms of the Tier 2, which is not cash and not immediate?
So the Tier 2 structure is such that on a semi-annual basis, on a 6-monthly interval, about a tenth of the original validated Tier 2 amount would be made available in cash. And so at that point, the clients should be able to submit a redemption request if they so desire for that cash to be paid into their GCB bank account. As I indicated earlier, the funding will still be available. So unless you have a need for the cash, it remains in the fund and it's managed for you.
So for the purposes of clarity, how long can somebody's investment, so to say, in Tier 2 mature into cash that the person can pick? How long will it need to stay before it becomes cash for the person to pick?
Currently, per the structure we are working with, the Tier 2 component of the fund should have a maximum of 5 years within which clients can manage to receive payments over a period, yeah.
Interest bearing or not?
It is non-interest bearing. However, the little advantage we have over it being 100% non-interest bearing is that because it is amortizing semi-annually over 5 years, it means that there will be 10 equal payments. And so every 6 months there is cash that is paid into the fund. Now that then becomes money, if not withdrawn, that can be managed or placed in some assets that could earn some interest for the client.
This structure is similar to what the government used with, initially used with the deposit-taking institutions.
That's right.
They initially said that some of them wouldn't receive all their funds in cash. It will be a non-interest bearing coupon for 5 years. But later, they monetized it and then gave the affected customers cash. If that wasn't good for those customers in the deposit-taking institution sector, why is it coming in here, especially when the government had to revert and then now it's introducing it here?
So if you look at the two models critically, yes, on the face of it, they look similar, but there are differences. So in the case of the deposit-taking institutions, clients basically had zero coupon bonds, which some of them actually had to trade at very steep discounts for cash. In our case, the fund, the tier 2 funds, where the similar arrangements sort of exist, is actually managed for you in a certain fund, and it has very attractive semi-annual payouts as well. And so if a client, for instance, needed to desperately do a redemption, for instance, they would not necessarily have to go and do the sort of steep discount transaction as occurred in the other model. And so yes, on the face of it, it is similar, but what we have done is to create a model that is actually an improvement over the other one and present some advantages to the client, advantage and convenience as well.
Is there not a situation where we revert to what we reverted to under the deposit-taking institutions issue or aspect, where the government had to come back and then monetize the bond and then pay off the customers up front?
That's an interesting question. I think that will be best answered by the official liquidator.
Okay, great. So at the moment you are making payments. How long do you think it will take for all this to be gone, especially for the first 20, while you await orders to be received by the liquidator and then pass on to you for the rest of the 30?
Yes, so indeed payments have commenced. In terms of timing, how long we will pay out everybody, that really depends on the client, because as I've indicated, some clients are even not in a hurry to actually cash out. We've had phone calls, we've had emails from clients who just want to confirm that indeed the allocation in tier 1 or tier 2 is available as communicated, and they are happy for it to remain there. So paying out cash is not actually the objective of our fund. Ours is to manage the process for you, manage your funds, keep your funds under management for you, and then we do payouts only when you redeem. Of the number, you refer to the 20 FMCs. They have about 5,300 clients in total. As we speak, about 3,000 of them have signed up for this. And I do not want to believe that the remaining 2,000 are waiting for the liquidator. I think it is just the whole approach. Some people just trying to decide which way to go. Some may even be out of the jurisdiction and haven't had the time to look at this yet. I am convinced that all, if not the greater majority, will sign up for this. And so it's going to be a running program over time, during which period, yes, as and when people need cash, they will submit redemption requests, which will process into cash for them. And also, indeed, it is a fund, so people may even decide to make deposit as well, which we would be happy to accept and add it to the pool and manage for them.
Great. This is a great source of business for you, and given your stature as an emerging brand, it's good for your starting. It gives you stability and all that, but it also comes with challenges, because these are quote and unquote disgruntled customers who may end up giving you part of their frustrations. How is the experience like in that regard, in the sense that they are customers and they also come with peculiar issues? How is it like?
Thank you for this question, Maxwell. Indeed, I've been asked before how I'm going to match up against existing funds in terms of performance benchmarks and all. And I have made the point previously that the other funds that people refer to are funds that clients have voluntarily walked in and said, take my money and manage it for me. I am happy with you. I, on the other hand, have inherited, to use your word, disgruntled customers, most of whom want their money right away. However, we have a fantastic team here at GCB Capital, and we are working round the clock, managing client complaints, dealing with the disgruntled clients. We go out of our way to do all we can, working weekends, voluntarily, etc., to please the client, such that you, without any prior training, because this sort of happened within a short space of time, you walk into our business offices, and my team, they are talking to them like they've had years of customer service experience. You would hear people dealing with clients like they've been working in a call center for years. So there are certain things that come, not with specific training in a particular area, but there are things that come with attitude, with human nature, and a sort of soft spot, understanding what people have gone through over the period as they waited for their funds. We keep that in mind, and on that basis, we deal with the clients. We go out of our way to do all we can to address their needs and make them happy.
I see. Another interesting point is why you and not the established brands like the Data Bank, the EDC, the SAS, and all that. Why did it take you to execute something that obviously requires certain experiences?
Thank you. Perhaps a number of considerations. But maybe the good folks at the official liquidator's office saw something in us that convinced them that we could deliver. And so far,
was it competed for?
I wouldn't know that would be at that higher level, but we got invited to take up this challenge, and we gladly jumped up to it. A consideration, of course, is the fact that our parent company, GCB Bank, has a nationwide footprint, and the client base that we are looking at also is spread nationwide. So yes, this is a capital markets operation under Securities and Exchanges Commission. So it was going to be run by a firm like ourselves, but it necessarily required partnership with a bank that has a nationwide footprint. And there is none larger than GCB Bank in that regard.
How much are you charging the official liquidator for this?
No, we're not charging the liquidator at all. So okay. Because it's a mutual fund, there are approved charges for fund managers, and so that is what would apply. Okay. Otherwise, we could consider a service to the nation.
So your fees will apply as a ratio of the amount that will be disbursed?
As a ratio of the amounts and the management from point to point.
As a result of.
That is correct,
okay.
Yes.
Okay. Let's talk about GCB Capital. How has the experience been like since you started?
Great. GCB Capital has been in operation for barely 2 years. This is our second full year, but it's been a very hectic period already. There is a lot we've done within 2 years that we didn't anticipate we would do. But then, as I mentioned earlier, we are spurred by the challenge to do new things. And so since our establishment, we have been involved in a number of very interesting transactions. We've been particularly active in the debt capital market space, where we've been advisors on issuance of bonds. We've done domestic bond issuances, as well as being part of the advisory team even for the sovereign Eurobond. So we've been very busy in the debt capital market space. We've also been busy doing a few new things. We have established a real estate investment trust, the GCB Real Estate Investment Trust, which has, within the space of a year, chalked some very, very impressive records. We have acquired properties in Tema and started a rent-to-own scheme for government workers. And under this scheme, we are currently housing a number of public sector workers in the apartment blocks. We've rejuvenated some of the abandoned affordable housing structures that date back to the era of ex-President Kufuor. So these were structures that have been standing idle for years. We've bought a number of them, finished them up, and housed people in there, all under the REIT program, and also working on a new housing development altogether. So that's one area.
Those you manage, how many do you have now that you manage, the estates?
So we bought one whole enclave of about, I think there are 5 structures in there,
okay,
with apartments. Okay. So in total, we are looking at about 48 apartments, individual apartments, 2-bedroom and 3-bedroom apartments in the affordable housing enclave, as I referenced.
Okay.
And then, as I mentioned, there are a little over 200 new units that are under construction that should actually be due for opening in the coming weeks.
Coming weeks?
That is correct. So that is the work under the Real Estate Investment Trust, okay, in addition to the debt capital markets and bond issuance business we've been doing. And we've also been very active in private equity and long-term financing. We have funding in some in shares in a number of entities, as well as being invested in a venture capital fund, okay, through which we are making disbursements to contribute to the development and sustainability of some SMEs locally and indeed across the boundary.
Let me take you back to your operations in the debt market. Currently, the debt market is doing so well, and we see a lot of companies coming to take debt, and that should mean good business for some of you. But the other aspect of it is it's coming at a time the equity market is not so impressive for obvious reasons. So how do you manage the two? For somebody like you, what does it mean for our market?
Right, thank you. So as far as our operations are concerned, and perhaps from our reading and understanding of the market, we have not, beside the venture capital private equity business we've done, we've not been active in the equity markets. So our focus has been on debt capital markets for now, and it's all strategic. The plan is that, in due course, we would build up speed in the equity capital market as well. But specifically for debt, yes, indeed, the debt capital market has been performing much better than the equity markets, and we did some good transactions. However, COVID-19 has actually also slowed down the market significantly. Okay. There are issuances, corporate issuances that we had anticipated this year that have not materialized. There are some parastatal entities that we also had actually won mandates for issuances of corporate bonds, which also have not materialized. So COVID has really dealt us a blow even in that market. Yep.
Interesting. You came from the universal banking space into investment banking, and you came in at a time that both markets had gone through cleanups and had prepared them in a way. When you look ahead with both experiences, what kind of financial sector do you foresee, and how can institutions like you, with the brand behind you, with the balance sheet behind you, what can you do to really deepen the market, develop it in such a way that it becomes an avenue for individuals and institutions to prosper?
Thank you. So the markets as have been over the past couple of years, yes, the cleanup has resulted in a situation where a bit more sanity, and I use this word advisedly, has been brought into the market. And I say this on the authority of the reports that the regulator, the Bank of Ghana for the banking sector, for instance, has been presented. You can see that the universal banking space, from where, as you indicate, I came from, has actually been performing much better than before. So on that score, you can say the cleanup has been very beneficial. In the investment banking space, ours is still ongoing. And in fact, this conversation we are having right now is more or less at the tail end of it. And one of the reasons why, indeed, it was decided to use this vehicle of a mutual fund to do the bailout, to complete the cleanup of the investment banking space, was to actually sort of restore that confidence that you can still have a fund that operates in the capital market space and sticks to the rules and then does things the way that investors expected them to operate. So the nutshell of it is that the cleanup in both segments of the market should or have actually instilled some confidence or restored confidence in the market for the investing public.
Finally, and let me pick your thoughts on something that is a bit general. Just 2-3 days ago, your regulator, Securities and Exchange Commission, issued new guidelines for the market, and one of them has to do with licenses and capital. Yours, I think, has been increased to 2.5 million.
2 million.
2 million. 2 million. Are you able to?
Are we able to? So this will take me back to a point I missed in answering your previous question about the back end of our parent company, what we could do to make sure that the markets, having been cleaned up, will not relapse, so to speak. Yes, so the entities that remain standing after the cleanup, having seen what has happened to their peers, now have a responsibility, moral and ethical duties imposed upon them to make sure that everything that is required of them is done to avoid the market slipping back into the situation that we found ourselves in. And to that extent also, the sort of collaboration and cooperation that needs to occur in our case between GCB Capital and GCB Bank to be sure that clients' end-to-end needs are addressed in a seamless manner in such a way that there wouldn't be need for the dark hole areas where people would get to play in some kind of transactions and in some kind of products are eliminated. Moving on to meeting the new requirements, we here at GCB Capital are quite well resourced, and we are in a position to meet that new requirement even without falling on our parents, because as I indicated, we've done some good business over the past couple of years. And what I used to say in anticipation of this requirement was that should it be beyond our capacity, we of course have a big parent to fall on. But the circular came out, and it is something that we are very well resourced to meet on our own.
Yeah, you are resourced because of the history and maybe because of the advantage that history provides, which has resulted in the businesses you have in order. But the rest out there may not have those advantages. Did we need 2 million for firms like you?
Looking at the nature of the business that we run and the kind of activities that transpire in our markets, I think the new capital minimum capital amount is quite fair. And so on that score, I don't think there is much debate around it, at least from where I sit. But then again, I also note in the circular from the Securities and Exchanges Commission that firms have up to the end of next year. So that's a whole year within which to build that capital base. And so I think it's also a reasonable time frame for clients to show up the capital base.
Great. Who is Kofi?
Kofi is a person that is passionate about many things, and these drive him significantly. Passionate about the world of finance and investments, which is more or less where I have played for most of my career. Passionate about stuff outside of work, the great outdoors. I love to hike and go into the greeneries and the mountains. I love music and I love to dance, and I have 2 very energetic boys that I love to play with as well.
You love music and you love to dance. Who's your favorite musician in Ghana?
That is going to be a tough question to answer because my interest in music cut across. One moment I could be listening to some Bach or Beethoven. The next moment I could be listening to some Reggie Rockstone or some Bob Marley. I cut across. If you push me to the wall to name one musician in Ghana, that's going to be a tough one. Maybe if we narrowed it down to genres, because I love different genres. So I might hazard a name in a particular genre, but cutting across that'll be tough. Maybe Kojo Entry.
Okay, I suspected so. Kojo Entry is your favorite, maybe, if you are pushed to the wall. We've been having a very insightful discussion with the managing director of GCB Capital, the man who is at the forefront of paying customers of collapsed fund management companies, 20 so far being processed, and we hope that the remaining 30 will come on board, and then they will take up the government bailout for the process to be completed and for the industry to start. We thank you, Mr. Kofi El-Awuku, for granting us the honor, and we hope you, our listener, enjoyed. I am Maxwell Akalara Dumbila, your host on Banking and More.